52 Traders, episode 65.
I think of trading as the world's best video game. I honestly do. And, that kind of mindset, it's fun as long as you don't trade dumb.
Over the next year, your host, Cam Hawkins, gets inside the minds of 52 of the world's best traders to find out if he has what it takes to become one of them. Join Cam every week on the 52 Traders podcast or at 52traders.com to learn how to trade like the pros. This podcast is for educational and entertainment purposes only and is not investment, trading, or financial advice of any kind. Trading is very risky and could lose you all of your capital. Any comments about historical performance are not an indication of future results.
What's up, traders? Welcome to another installment of the 52 Traders podcast. I'm your host, Cam Hawkins, and today we've got Al Sabogal on the show. Now, Al is a ex-hedge fund, ex-broker, pretty much everything. The guy has spent his entire life in the financial markets, and boy does it show. So Al is on the show today. He's also one of the top Twitter guys out there, so he's one of the top people that have been voted as most useful on Twitter. So we've got him on the show to share with us basically how he started and where he is now and how he got there. And we dive into quite a few different things, especially around trying to find out what does happen within these big hedge funds. So you're going to find that out. And also, another really good one was who he would recommend as the best person to follow on Twitter for your trading. So some really good insights in the show. Before we get into it, though, first of all, I just want to let you know that the show is now available on SoundCloud. So if you are a SoundCloud user, jump on there, type in 52 Traders in the search box, and you should get access to everything. Okay, and one last thing, if you are interested in trading robots and automating your trading, jump onto automatemytrading.com where I teach you how to build trading robots, and you can actually watch me build one and grab it for free on the homepage there, so jump onto automatemytrading.com. Right, so without further ado, let's get on with the show. Welcome, Al. Thanks for joining me here on the 52 Traders podcast. How are you doing today?
I'm doing great, Cam. Thanks for having me on.
Hey, look, thanks for coming on. I've mentioned some of your highlights already, and I know that's probably just a small part of your story. So can you tell listeners a bit more about you and what first attracted you to trading?
Growing up, it's just the allure of making, a lot of money, like you read some of these, market wizards doing. That's kind of the book that got me interested onto Wall Street. I grew up in New York, so the allure of Manhattan and Wall Street was, always front and center. And as a kid, and is going through school and stuff like that, when I tried to figure out the kind of the career path that would lend itself to hopefully making a lot of money and having fun at the same time, Wall Street just seemed like a natural fit. And that's how I kind of set my sights on working on Wall Street. I graduated with a finance degree and kind of hit the streets looking for a job with a buddy of mine, and found a job at a brokerage firm called Gruntle & Company, which is no longer around. But that's the firm that Stevie Cohen came out of, so that's kind of like its claim to fame. I got my foot in the door, but wasn't really happy with working there long term, but it was a good foundation to, especially once you're working on Wall Street. The most important thing is getting your first job, and then then you can use that as a springboard to something better with a little more experience. And I ended up applying to a few jobs, and one that came up was for a relatively unknown small hedge fund, and hedge funds weren't even that popular at the time. Back then, the only ones you really read about were basically like Soros and Steinhardt and a couple of other famous ones. But it wasn't nowadays, especially over the last call it 10 years or so, the allure of working for a hedge fund, and after we've seen all the billionaires minted and the big money bonuses going around, it just became like the place to work. But that wasn't the case back then. So for me, it was just one of three options I had at the time, and I liked the fact that I'd be working. The position was be working close with the traders. It was really for a back office position for a small firm, but for me, I just wanted to, with my experience, get into a position where I could work with and close to the traders, and kind of be a sponge and kind of prove my worth and hopefully move up the ranks, so to speak. So, and at the time, the big allure, which was kind of a funny thing now when you think about it, was that they were casual, meaning that you didn't have to wear a suit and tie. When back in the 90s, almost every single firm that you had to work that you applied for it required a suit and tie. The whole casual theme didn't really take off till probably early 2000s, but they were an early adopter, being a bunch of successful hedge fund guys coming out of brokerage firms, and they started their own firms. So that's kind of got my foot in the door at the firm that I really worked at for most of my career, and I put in a solid 19 years there, working my way up from basically a back office grunt, from a 2-person team to running the back office, growing it, and then using that as a platform to work my way onto the trading desk, which I spent probably close to 15 years on. Again, and the whole career path started all over again, where I started in a position of being like the junior guy on the desk, and then given a book, because we were organized on the desk as a sectorized, so each trader covered one to a handful of sectors, and kind of focused the trading on that specific sector only, and then working within the few sectors at a time, and then moving on to other sectors, then working my way up to a more senior position on the desk, and eventually becoming head trader for probably, I'd say, the last 5 or 6 years that I was at the firm.
Well, cool.
That was my career back then in a nutshell, and basically got me to the where I am, where I trade on my own. I've since moved on from there and effectively retired, but just in a mental state, because I work all day trading on my own, and it's just as much work, if not more, than working back then. But it's different because it's enjoyable. I do it on my own. I don't have to answer to a boss, and I truly enjoy what I do. And I share a lot of what I do on Twitter, as you've probably seen. But that's basically my career path in a nutshell, and how I got into trading.
Cool. And so one of the things that's intrigued me, and I've checked it down on some documents before that I've published, where I've said, out of all the guys I interview, it seems that if you work in the industry at some point, doesn't matter what you do, broker, hedge fund, whatever, you seem to have an advantage over other traders out there. I mean, what are your thoughts on that?
I mean, yes, I guess just because of the experience. I mean, one of the things that you have to put in this job, and that goes for the retail trader to the professional trader, is screen time and so to speak, seat time. Just when you live and breathe the markets as your job, I mean, you have an advantage because you kind of get forced experience, right? You don't necessarily have to be trading your own money if you work as a trader. Because you are experiencing and getting a lot of, there's obviously a difference when you're trading on your own, because then, that brings into, a whole bunch of other dynamics as, when you're risking your own money. It's a difference between paper trading, I guess, and live trading with real money. But the one thing I'll say is that, there's an advantage from just experiencing, over my 15 years on the trading desk, where you kind of see all the ups and downs, the flash crashes, the euphoria, the 2008, 2009 meltdown, and then, the March 2009 bottom, and then, feeling like there was no hope, and then all of a sudden March 2009 it kind of just turned, and we never basically looked back. So I mean, it's almost like you're cheating because you're getting experience without, especially in my position where I was, trading for portfolio managers, and I got to see, some good traders and some bad traders, and you kind of try to absorb, and you can learn just as much from a bad trader as you can from a good trader, obviously with a kind of the opposite effect. But there's good things that you take away from just being in the seat on a trading desk, especially because you're just absorbing years and years of screen experience, and someone who's starting out obviously doesn't have that. And is one thing, if you're the kind of person that kind of looks for ways to keep on learning and bettering yourself. And for me, I always wanted to position myself to be trading my own money. So it's like you kind of pick up little clues. You'll be surprised over the years, like a little thing here, a little thing there. It all kind of helps you in the long run kind of develop your own process, your own style, and get your own feel for what works and what doesn't in different market environments. So, I mean, that obviously is an advantage. It's not to say that someone doing it at home can't get there, but it's the screen time is invaluable. So you have to just kind of have to figure out a way to be in front of the screen to absorb the different cycles and how different things affect different outcomes and things like that. So to make a long story short, it definitely helps, but doesn't necessarily have to. It's not a requirement, but there's an embedded advantage. Just as if like you wanted to start your own construction company, working at a construction company prior gives you a huge edge, right? Just because you can learn on someone else's dime.
Yeah, and I look. It reminds me of when I was younger and starting one of my first proper jobs, and I was lucky enough to be given you had to build the intranet, and I was like, okay, well I don't know anything about building an intranet, and I ended up buying this book where you had to learn Cold Fusion, which was a programming language, in 28 days. It said learn it in 28 days, and I went through the book at work, and it took me about probably 48 days, solid days of doing it. But by the end of it, I knew the whole thing inside out, and I'm like, there's no way I could have done this if it wasn't for the fact that I was getting paid to do it. If I had to do it at home, it would have taken me a whole year. So I think what you're saying there is the advantage is you're getting paid to learn, either directly or indirectly, if you're in one of these firms. So another question I've got on that, and this was somebody asked this to me, if I could ask this question to get some guys on the show who are hedge fund managers or work in the hedge fund industry, to find out if there are any big secrets that you guys know that the retail traders don't know that could help them out. So is there anything like one or two, can you share with us one or two things that you consider a secret in the hedge fund industry? If you can, that is. Okay, so that was the first part of the show. Now, to hear the full episode, the best bits, join the family at 52traders.com. They usually go for about 45 minutes to an hour long, and trust me, these shows are great. They give us so much insight. Now, if you want to get there quickly, all you need to do is jump into the show description on your phone, and there's a link taking you directly to 52traders.com, where you can join the family over there and listen to the full episode. Now, in the rest of the show, I cover off what my traders do differently from the rest of us. So what is it that they're doing that we're not doing? What their typical trading day looks like, what they would do if they had a day job now and wanted to trade for a living, their preferred trading strategy, so actually how does it work? What we should be educating ourselves on when we're looking at a price chart, so what indicators we should use, what price levels, what chart patterns, all those sorts of things. Also, we touch on fundamentals as well, so how do we use news to our advantage? Trading psychology, tips, tricks, techniques, we go through those. Exiting trades, managing trades that you've got running. So we talk about their strategies. They give you strategies for exiting and managing trades. Books to read, websites to visit, all the best ones. Something that you should try and master over the next month. The broker and platform they use. And finally, last but not least, they give us a full trading strategy. So something you guys can try out at home on your PC this week in the markets if you wish. Now, to get the full episode, you need to jump onto 52traders.com, join the family. As I said, it usually goes on for 45 minutes to an hour, and there's a link in the show description, so if you're on your phone, just jump on there, tap the link, and it'll take you straight to 52traders.com. Now, if you're thinking about learning to automate any of your trading, hiring a developer, learning to code, that sort of thing, then before you do that, jump onto my other website, automatemytrading.com. So if you're interested in automating some or all of your trading, then jump onto automatemytrading.com and you'll see me over there. For now, to hear the rest of this episode, all you need to do is click on the link in the show description or go to 52traders.com. See you there.